Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 435 on July 11th, 2026. I'm your host, Eric. In this week's show, we'll cover the trades from last week on SELLAS Life Sciences Group, the T-Rex 2X long MSTR daily target ETF, BitMine Immersion Technologies, and SoFi Technologies Inc. And we discuss 4 new trades on Quantum Computing Inc., Replimune Group Inc., the Nokia ADR, and Supermicro Computer Inc. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC at theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the equity markets finished the week mixed, with the Dow Jones and the S&P finishing in different directions. The Dow Jones Industrial Average lost 263 points, closing at 52,637 points. The S&P 500 index grew 92 points, ending the week at 7,575 points. And now it's time for the topic of the week. The topic of the week is remembering your own trading goals. Now, I'm not sure if you guys realize it yet or not, but these topics of the week are either questions that I receive via email from people, or they are from my own personal introspections. I am prone to try to take a piece out of every move that a stock makes during the day. I am in front of multiple screens all day, and I'm buying call options when the market's going up, and then I'm selling those call options the moment it changes, and I'm buying put options as well if I think the market is going lower. I'm happy that most days I make money trading, but some days I trade during market patterns that are not high probability for me. As I review my trades for the week, I'm forced to remember my own trading goals. That also means acknowledging that I've not been true to my own trading goals. Once you acknowledge something, you have the power to fix it. I was over trading out of thinking that I could capture every move. The truth of it is that my trading style works best when there's a trend. So what is your trading style? Do you have a written trading goal? I don't mean an end goal like the size of your account. I want to have $100 million account or something like that. I just mean a stated goal or mission for your actual trading each day, each week, each month. Make sure that your actions and your actual trading goal is in alignment. That's a message from me, and that's a reminder for you as well. That's it. All right, so let's dive into the review of last week's trades. We're going to start off with our covered call. We looked at the SELLAS Life Sciences Group, symbol S as in Sierra, L as in Lima, S as in Sierra. At the time, the stock was trading for $14.97 per share. I looked at buying that stock and selling the July 15 call at $2.35, hoping for a return of 15.90% in 2 weeks. Well, shares of SLS fell $2.22, ending the week at $12.75 per share. The call option that we sold lost $1.40, leaving us with a net loss of 82 cents if we were to close the trade out immediately. Now, the share price is still above the break-even price, so we are still fine not making any adjustments on this trade. And the good thing is that the stock expires this week. So the option actually expires this week. If the option expires out of the money, we get to keep that $2.35 we collected for selling the option. We can then turn around and sell another call option that expires in August. Right now, the 15 call in August can be sold at $3. That means we will have collected $5.35 of option premium for buying a stock that's worth $15 per share. That also lowers the break-even price another $3, y'all. So no adjustment is needed on this at all at this point, unless you truly don't understand option math. Go back through it, write it down on paper and do the math so that you understand. But I plan to let this one work out for me. I don't want to get in the way of a trade that is working out. That's why it's important to keep that break-even price in front of you. Next, we have our cash secured put on the T-Rex 2X long MSTR daily target ETF. Symbol M as in Mike, S as in Sierra, T as in Tango, U as in Uniform. At the time the stock was trading for $2.14 per share, I looked at selling the July 2 put at 23 cents. That would give us a return of 11.50%. Now, shares of MSTU fell 27 cents, ending the week at $1.87 per share. The put that we sold grew 4 cents and is currently in the money by 13 cents. Now, if the stock price expires here, we will end up purchasing the stock for $2 per share, which is 13 cents above where the stock price is. Of course, we collected 23 cents for selling the put, so we would actually be buying shares for an effective price of $1.77 or 10 cents below the current value of the stock. This is once again why knowing your break-even point is so important. If you get assigned the stock at expiration, we will then sell an August call option against the shares to create a covered call. You can sell the August 2 call at 26 cents right now. That also lowers the effective price of the stock purchase. So holding things even, that would mean buying stock at an effective price of $1.51 per share. If the stock price rallied above $2 per share and took you out of the stock, you will keep all of the option premium you've collected for selling the put and selling the call option in this future scenario. And that would mean 49 cents that you collected, 49 cents on a $2 stock. That's nearly 25% return on capital in 2 months, y'all. That's amazing, right? I get excited by stuff like this. So, of course, no adjustments are needed at this point. Just make sure you have a plan for what to do after expiration if you get assigned on the stock. Next, we have our credit spread on BitMine Immersion Technologies, symbol B as in Bravo, M as in Mike, N as in November, R as in Romeo. At the time, the stock was trading for $14.35 per share. I looked at selling the July 14, 13.5 put spread at 16 cents. That could give us a maximum possible loss of 34 cents per spread. Well, shares of BitMine grew 61 cents, ending the week at $14.96 per share. The out-of-the-money put spread is now even farther out of the money. Stock price, of course, is above the break-even point, and we are only 5 business days away from expiration, so I can't wait. The stock is more than $1 above the break-even price, so hopefully this expires out of the money. No adjustments are needed at all right now, but I will be keeping an eye out on the stock price over the next few days, just in case I need to make any changes. And finally, we had our debit spread on SoFi Technologies Inc., symbol S as in Sierra, O as in Oscar, F as in Foxtrot, I as in India. At the time, the stock was trading for $18.25 per share. I looked at buying the July 17.5, 18 call spread for 32 cents. That could give us a maximum gain of 18 cents, or that would be a 56.25% return on capital in 2 weeks. Well, shares of SoFi grew 54 cents, ending the week at $18.79 per share. The in-the-money call spread that we bought is now even deeper in the money. That means this is working out as planned. So no adjustments are needed at all on this trade as well. We definitely have to stay alert with expiration on Friday on all of these, but so far so good. So that's it for the review of last week's trades. We are, of course, 1 week away from July expiration on Friday, July 17th. All new trades on today's show will use the August 21st expiration for monthly options in August. So we'll start off with our covered call on Quantum Computing Inc., symbol Q as in Quebec, U as in Uniform, B as in Bravo, T as in Tango. The stock ended the week at $8.66 per share. I'm looking at buying stock and selling the August 9 call at 94 cents, hoping for a return of 14.78% in 6 weeks. Now you enter this trade by buying stock for $8.66 per share and selling the August 9 call at 94 cents. This trade makes the most money if stock prices finish above $9 per share. The break-even price on this trade is $7.72 per share. In real terms, the stock purchase will require $866, and you'd collect $94 for selling the option. Next, we have our cash-secured put on Replimune Group Inc., symbol R as in Romeo, E as in Echo, P as in Papa, L as in Lima. The stock ended the week at $10.99 per share. I'm looking at selling the August 10 put at $2.55, hoping for a return of 25.5%. Now you enter this trade by selling the August 10 put at $2.55. This trade makes the most money if stock prices finish above $10 per share. The break-even price on this trade is $7.45 per share. In real terms, you'll collect $255 for selling the put option, and you'll have $1,000 locked up in case you need to purchase the stock. Next, we have our credit spread on the Nokia ADR, symbol N as in November, O as in Oscar, K as in Kilo. The stock ended the week at $12.42 per share. I'm looking at selling the August 12-11 put spread at 40 cents. That could give us a maximum possible loss of 60 cents per spread. Now you enter this trade by selling the August 12 put at $1.05 and concurrently buying the August 11 put for 65 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $12 per share. The break-even price on this trade is $11.60 per share. In real terms, you'll receive $40 per spread that you sell and have $60 at risk. And our final trade on today's show is the debit spread on Super Micro Computer Inc., symbol S as in Sierra, M as in Mike, C as in Charlie, I as in India. The stock ended the week at $28.33 per share. I'm looking at buying the August 27-28 call spread for 65 cents. That could give us a maximum gain of 35 cents, or that's a 53.85% return in 6 weeks. Now you enter this trade by buying the August 27 call for $4.45 and concurrently selling the August 28 call at $3.80. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $28 per share. The break-even price on this trade is $27.65 per share. In real terms, you'll pay $65 to enter the spread, and your maximum gain is $35 per spread. So that's it for this week's show. Thank you guys so much for listening. I know I put this one out a little bit later than normal. I had some travels that got in the way of me being timely as normal. So forgive me, but hey, I hope you enjoy the opportunities that I share. So keep listening. Come back next week. And as usual, happy trading.
Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.